I think the most important point is that it hasn't resolved uncertainty, it's created it. Because the truth is, everybody knew that when Britain decided to vote for leave, it was a leap into the unknown. So I expect the first consequence to be the consequence, as it were, of uncertainty. We know that businesses, financial businesses including investors, don't know what happens. They don't know who the next prime minister will be. They don't know what the next government's complexion will be. They certainly don't know what its policies towards the EU will be. And they, of course, also don't know what's going to happen to the economy immediately. So the natural thing to do is to retrench, to be cautious, to invest less, to take money out of sterling assets, to disinvest to the extent they can from the UK, given these huge uncertainties. We're seeing some of these effects already with the very large fall in the pound. That seems actually might even be helpful. But I think beyond that, we're going to see a sustained period of economic weakness in the UK as investment decisions are postponed, as people see what happens. And I think there will be similar effects, but not quite so big in the rest of the world, particularly in Europe, because they too will be uncertain. And Britain is a very important market, actually the most important market for the Eurozone. There will be fiscal effects. Probably in the long run, we're going to have to tighten fiscal policy, and the economy of Britain will be reconfigured. Businesses dependent on the European market will change the way they're structured, and that will be a long, complicated process, along with long, complicated negotiations, could take a decade.